All right. There we go. Let's go. See what we got here. May 7th, Thursday. Let's do this thing. All right, so we got two balanced price ranges. Got one here. Does not look nearly as strong as this one, which is at the bottom side of a prior first presented fair value gap from the opening of London session. So we're thinking, although we were thinking bullish, especially with the rejection of this balanced price range, by the time we get to this one, there's reason to suggest we're going to start getting bearish. Overall, we've got a positive or a bullish ladder, so we're looking up. But let's see how we should see how we react to this area, which is rather strong. Okay. So what do we have here? All right. So we reject the balanced price range. We print through that a bearish balanced price range. We reject the consequential encroachment of the London first presented fair value gap, and we start falling. Oh, we don't reject it yet. We're just rejecting it. We print to the other side of the London first presented fair value gap, but we can't print outside of it. This is at 927. We print outside of the London first presented fair value gap and eyeing the balanced price range to see how we handle that. And we invert it by rejecting the latter and taking liquidity from a recent low, the one from 908. Okay. Sweeping that liquidity does what for us? I should see that sweeping this liquidity isn't sufficient, considering the fact that we struggled to get outside of this fair value gap. So the question then becomes, do we reject this box again? We take this liquidity, we struggle to get into the box, we print past the consequential encroachment of the London fair value gap, struggle to get past 12.5, and then print just shy of the 25%. So we are thinking bullish. We have wicked to 50%. It would have been a decent trade if we took this liquidity here and took this for 727 to 772. That's 45 points. It's not bad. Wouldn't be a bad trade. But not what we're looking for, especially considering the fact that we now start printing down. Although okay, so I see. We can't print past the consequential encroachment of the first presented fair value gap from London. We actually then, although going back into it to recharge, run all the way up and print at 50%, which indicates to us that we're still quite bullish. So we should be holding on. We threaten a first presented fair value gap for the session, doesn't take, and we start printing to the downside back into the first presented fair value gap from London. Rejecting it to this downside, grabbing further liquidity from the downside from what looks like almost the 730 range, grabbing liquidity from the 730 range. Okay. All right. After grabbing liquidity from the 730 range, in my eyes, we're eyeing this first presented fair value gap down here from a prior session, but we immediately start to turn around and we print right back into the ladder, right into the first presented fair value gap from London, which tells me we're definitely bullish at this point. Although we're shy of the consequential encroachment of that first percentage fair value gap, we printed inside of it and on top of the ladder after grabbing liquidity twice. I would look for some sort of confirmation before continuing, but I'm looking for something bullish. Next candle is definitely not only printing inside, we create a balanced price range on top of printing outside of the first presented fair value gap from London, which indicates to me that we're not only bullish, this would be an optimal entry for me here at 761, because the next candle prints right through the first presented fair value gap for the session, all the way to 87.5% and wicks right through. In reality, I could have taken this, but I like to say that it would have been ideal to get in right here at the close of this candle at 761. That says to me everything that I need to know in terms of having a bullish bias. Even still, I could get in at any point once this candle starts to turn green, especially as it's clearly printing past the first presented fair value gap from the session. So we're thinking 761. And now it starts to come back down. It rejects 50% of the ladder and prints outside of past the 100%. So we're 100% bullish at this point. We should only be thinking bullish. Waffle a little bit, we then make all-time highs, and we don't turn around. At what point? If I'm looking at 761, I'm already up 150 points. Okay. Now keep in mind, the reason this wasn't going to be an area in which I could have just taken this off the jump is because there was a first presented fair value gap that already printed on top of the box. That creates a zone for me to pay significant attention to. And I did not do that earlier today. So that's something I definitely need to do. If there's an area of interest, I need to pay attention to the area of interest rather than just jumping in and reading the ladder the way I normally would. So, all-time highs, I definitely could have taken profit here, but I would like to, let's say there are two ways minimum that I can handle this. I could put a stop in structure down here at 768, so just move myself into profit, or I could follow 3 candles behind. So 1, 2, 3. There would have been a stop here just outside of the box, outside of the ladder. Let's see what happens. It would struggle to come past these balanced price. Okay, so if I put a stop 1, 2, 3 here, it still wouldn't have come down. Again, making all-time highs again. I say 61. Oh, 761. Oh, we didn't make 100 points yet. My apologies. Wait, yes, we did. So no, we didn't. I can do math, I promise. Yes, so we're almost. So we're just 2 points shy of 100 points at this point. So I would probably try to follow it liberally, and there we go, all-time highs, and we keep going. Let's see. So we get this 897 from 761. Now we're 137 points up. All right, where would I follow this is the question. If I follow 3 candles back, that puts me here. Ideally, I'd like to put my stop into the new structure. So here, a new lower low. So at 814, that's where I put my stop. What happens? Okay. Especially trading around all-time highs can be really interesting. Okay, we're trying to create some fair value gaps. Okay, what are we doing? Okay, what is this telling me? What is this price action indicating to me? We're not making a lower low. We made a lower high. We're not making a lower low. If this were to move violently, what would that indicate to me? Right now I'm seeing a little bit of an up move, but I don't necessarily have an order block or anything of that nature. So I'm not seeing anything that would suggest that I need to move my stop to here just yet. but maybe that would be wise. 855. Put me at 90 points or so. Okay, so we make a new higher high and then a new higher high. So now I would feel comfortable moving my stop into some kind of structure. So here, let's see what this candle does, because it is looking like it's going to start turning around at this point. Create a balanced price range. I want to get out of this immediately. Oh, okay. So I would have moved my stop just to maybe 1, 2, 3 candles back. So here, move my stop here, 871. That puts me at 110 points in profit. And we make a new higher high, which is extremely interesting to me. And does this candle structure indicate to me that there's any signs of reversal? Not yet. We create a balanced price range, and oof, that's dangerous. So if I have my stop here, if I have my stop, where did I say it was 871? So where is 871? Oh, 871 was the price that we were watching. No, well, I went up to 900. Jeez, you're rich. Got it 671. Wow. 871 is here. I would have been stopped out at this point. Yeah, I definitely would have been stopped out at 3 candles back. Yep, that would have stopped me out. And there's a balanced price range there. I'd be scared, and it keeps going up. So I'd have to figure out how to. Okay, so that means that putting my stop here, although interesting, is dangerous, because the price comes all the way down here, which means that I should have my stop here instead if I want to stay alive in this trade. Question is, how much more can I squeeze out of this trade? Keeping in mind that I do have a 786 here, and for whatever that means, I'm not a huge fan of the 786. So maybe when I start to get close to the 786, I start following 3 candles back. But at this point, maybe it's not worthwhile. I still hold it all the way back here, just in case. So at 858, I'm just shy of 100 points. Just shy of 100 points compared to...
Don't be shy.
Getting taken out. Actually, no. Getting taken out at 100 points. Okay. Okay. Getting taken out 70 points later. So I could squeeze another 70 points out of this if I didn't get taken out. Okay. And I think at this point we're starting to come down. We create another balanced price range, which is concerning, and we start melting down. So I guess my point here is after getting stopped out, maybe I'd start looking for that reversal off the 786, especially after a creation of the 786 plus the balanced price range. We're looking for a short here. I think we're looking for a short. And we come back to test the consequential encroachment of this fair value gap here. Looks like another balanced price range created here, which definitely indicates that we're probably bearish. See if we come back to test that. Do we make it to the consequential encroachment? Technically, it should be in here. So I'm in profit again. That's 50 points. Okay, so I might get stopped out somewhere around there because I'd probably put my stop. Yeah. Okay. And then we're chopping because that's what's happening. I need to see a lower low. I see a lower low. If I were to hold this, there's definitely some interest here. And this just melts. Wow. Okay. It's just a straight tuna melt all the way into all the way down to back to the ladder. This was man, you could have made some serious money off of this one. 170 points up, followed by 100. What is this? 150 points down, at least by noon. Jeez, it's like 200 points. This is beautiful. This is actually pretty interesting setup. So lessons learned, and this is noon. How did the afternoon look? We'll just do that real quick. Okay, let's see. After we print all the way into the box and we reject, what do we reject? We reject 50%. We print. So this would be concerning to me, but we can't print outside the box. We print to the 62.5 after retracement, but it's because of these two first presented fair value gaps. So I'd have to see myself print past them, print outside the box. I'm starting to think very bearish. And we continue to fall to the next presented fair presented. Oh my goodness, and we just melt right through. A little bit of a retracement. Geez, there was just so much money to be made here today. Oh, wow. Okay, and then we reverse. Oh, let's see what happened. We have the 786 here. We don't just have the 786, we have a 1 that we literally tapped, which means this was the low of Sydney, Tokyo. We literally tapped that and reversed. That is very interesting. And that means that there could have been money there too. But let's see what happens. We'll go a little bit longer. I don't generally like to play past too long, but let's see. All right, so then we reversed. We're definitely printing through the ladder. We reject it for a little, and then we just print right through. We can't make it to we can't print past the 50%. These two first presented fair value gaps plus the balanced price range, which we reject. And we're thinking bearish. We're thinking bearish. Slight retracement, but we're still thinking bearish. But this first presented fair value gap, and we print through it, and then immediately turn around, and then we print through it again, and we print through all of them. And then we turn around, and then we just keep making lower lows. We're still thinking bearish. Although it does look like the steam is running out on the bearish run, we're making lower lows and lower highs. If we make a lower low here, yes we do, we print past the 786. Looks like we're heading for that 1 again. Can we make it down to the 1? We make it past the 1, we print past it. We make it down, and then we reverse past the 1 to retracement at the 786, plummet, and then print way past the 1 down to this other first presented fair value gap. And it's now 130, and we're looking to see if we can generate a first presented fair value gap for the afternoon session. We're struggling mightily against a breakaway gap. We create a small first presented fair value gap, and then we get rejected at the 1 right above. And then we print through, we get rejected, we test the first presented fair value gap of the PM session, rejected, and then we start going back for lows, but we don't make it, and then we reverse it, print past it, print past all these first presented fair value gaps, reject at the 4th one, and print past it, aiming for the AM session, but we can't get past it. Turning around, and we chop a little bit, and we print past it, but then come back and reverse that, and then we chop a little bit more, just chopping between these first presented fair value gaps, which could be decent for some scalping activity, but I'd have to learn how to read this properly because they're stacked on top of one next on top of the other, and I really don't like this area. It's just too much. I want to see bigger movements. Oh wow, speaking of bigger movements, we just plummeted right through the session, PM session, first presented fair value gap, testing the breakaway gap, and we inverse the breakaway gap, back to the session, first presented fair value gap, reject it to the south side, can't get back up to it, and then we print through it to the top side, to the north side, reject the prior one, print past the PM session, first presented fair value gap, closing it on 330, And we are just in range. We are just in range at this point. Okay, now we see we print past the first presented fair value gap, second one, reject the third one, print past the second one again, print past the third one, reject the third one again, reject the second one, print past, okay, we'll print all the way back to the top one, and then reject it, and then print all the way back down. It's getting close to 4 p.m. We don't care about what happens at 4 p.m. because we're just dancing around the 786 plus these 3 fair value gaps. And my goodness, after 4 o'clock, things just go out of hand, and we stop paying attention.